Steve.
The Federal Reserve cutting interest rates by a quarter point to a new range of 3.75 to 4%. There were two dissents on this. The second one by new Fed Governor Myron, who wanted 50. First one by Kansas City Fed President Jeff Smith, who wanted no change. So dissents on both sides, a kind of a rare occurrence for the Fed. The Federal Reserve announcing it is stopping quantitative tightening or the roll-off of its balance sheet as soon as December. All roll-offs of treasuries from here on out and mortgage-backed securities on the Fed's balance sheet will now be invested into T-bills. It's a bit of a change there. On the economy, the Fed said economic activity expanded at a moderate pace, according to available indicators. One of two nods in this statement to the absence of data by the Federal Reserve. It had said in September that the economy was moderating, so almost a bit of an upgrade to the economy, but according to available data. Job gains, it said, has slowed, however. Unemployment remained low through August. And again, it said more recent indicators are consistent with these developments. That's another nod to the idea that the Fed doesn't really have the official data. More recent indicators is what it's using. Inflation, it says, has moved up since earlier this year and remains somewhat elevated. That is the same characterization as September. And there's not much in the way of forecasting the future path of rates. I believe that'll have to wait for the press conference from Fed Chair Powell. But again, the Fed cutting by a quarter, two dissents on both sides of the issue. One wanted more, one wanted none at all, and the Fed stopping quantitative tightening as of December. Guys?